Guys, are you able to see the screen? Trading insights, the emotional cycle, right? So at this point, okay, all good. In case you need to ask anything, please make sure you type it on the chat box below, and I will answer it as soon as possible. So in the meantime, in today's webinar, we will analyze the emotional cycle of every trader or every investor goes through, and especially in trading, due to the fact that we get in and out of the market in a very short time horizon, and therefore we are dealing a lot with sometimes uncomfortable decisions. And of course, every time we're gonna get in, and especially we're gonna get out of any trade, any position, regardless if it's in a winning or in a losing stake, doesn't matter. We are facing some emotional distractions, better say it that way. So for today's agenda, we will talk about the emotional cycle. We will analyze the states of the emotions, and we will see some chart examples. After I'll go through the PowerPoint slides I prepared for you, I would move to the MetaTrader 5. I will use a specific currency pair, the USD Japanese yen, because it has a lot, it reflects a lot of this type of analysis. So, and of course, as usual, our risk warning, to make sure everyone understands that this content is for general information only and is not intended to provide any trading or investment advice or any personal recommendation. As for myself, allow me to briefly introduce myself to you. I have more than 10 years experience in trading and investing. I hold a master in physics. When it comes to trading, I prefer to use some long-term horizon, like a swing trading, unless I go to an intraday mode and just be in and out of the market at specific time, looking at specific parameters and doing only one trading style. Okay, very, very, very specific. And I'm calling every intraday trader to make sure if you're gonna use intraday charts to trade, you have to dedicate a specific amount of detail, and you develop only one trading style, because that's, in my sincerely opinion, that's the only way to get ahead of the markets. And here at Admirals, as I already mentioned, I'm a trader and educator. I'm also an analyst, and I write trading and investing courses. Now about Admirals, we are a brokerage firm. We offer we have multiple licenses, and we offer thousands of financial instruments. Some of them, as you already know, it's the Forex, it's the stock, cryptocurrencies, ETFs, and all this stuff. In license, we have license in Cyprus under CISEC, in Estonia under EFSA, in UK under FCA, in Australia under the ASIC, in South Africa, in Canada, and many other countries. Our spreads, we try to keep them as low as possible, and I always love it, because when we do intraday trading, the spread, it has to be on an instrument. We have to choose that the spread is very minimal. For now, our instruments are available through the MetaTrader services, the MT5 and MT4. However, we have now developed our own native trading. You can access it from your back office, and soon, I believe by June, July, maybe August, September, no, I'm joking. I believe by June, July, we will be able to trade with TradingView platform. And we're going to just switch our analysis from MetaTrader. At least that's how I'm going to present it. Now, let's start. First things first, traders, they meet at the beginning with greed. Now, if you are trading for even 1 week and you made some trades on a real account or even on a demo account, at some certain point, you may experience the emotion of greed. And how do you know that is the greed state, that emotional state from the cycle that is currently kicked in? Simply, you're going to have the first experience of excitement. It's like, wow, look at what am I doing here. Let's take the Euro US dollar. You bought it. Oh my God, it's moving higher and higher and higher. It's going to move there forever. I'm going to buy a new home. I'm going to buy a new car. I'm going to do everything from one trade. I get excited and my mind starts dreaming. I start thinking of what I want to have. And wow, that's the best thing happened to me ever. Let's move on. Trade close profitable. I know what I'm doing, right? I'm sure some of you can resonate. I try to make them a little bit more scenario type, so it's closer to how we are as humans, right? And after we experience some profitable trades, what potentially we do? We feel that our confidence is on the roof. We feel that not only we know everything in this particular moment about trading, but also we believe that losses are not gonna be a part of my trading activity. And that's the point where traders and investors, they start stepping into the wrong path. But that's an outcome of the certainty we receive by having that winning strike, or by having that 5-1, 7-1, something that is kind of outstanding based on the standard. So we do start not perceiving the risk as part of trading business. We don't do it because we choose to. We do it because we are kind of overconfident. And when we are in an overconfident state, it's like we think so powerful, we think so empowered, and inevitably it's going to lead us to think that we can do anything. But this applies to things that they are in our control. And I will say that, and I will define what I mean by things in our control. For example, if you are attending, if you go to the gym and at some point you are making an exercise that you do 10 reps, and your confidence is boost up for a reason and you feel that you are super strong, maybe you're going to go for 12, 13, 15, 20 reps and keep going until you say, okay, I'm done, until you feel that satisfaction. That's in your controlling zone. But here, how far the price, if you bought and you are looking for prices to rise, how far the price will rise, it's absolutely not in any traders or investors' control. That's what I mean by saying it's not in our control. On the other hand, the only thing, there is only one thing a trader or an investor can control, and that's the risk. What this overconfident state of mind lead us to believe is that there is no risk. But on the other hand, the only thing we can control is the risk. But if we believe that risk doesn't exist because of our winning trades, automatically takes out of the equation the one and only thing we can control in trading. And if you take out the only thing you can control, it means the rest are out of control. You cannot interact to how much the price is going to move up as a retail trader, or how much it's going to move down, or when it's going to move up, or when it's going to move down. The only thing you can do as a retail traders, including myself and millions of other retail traders, the only thing we can control is, before we initiate a trade, how much money do I want to risk on that trade? And as Admirals broker allows me to use stop loss order in order to protect my capital. If my call is wrong, then I better remember only these two factors when I'm trading. So when the overconfident state kicks in, I'm not going to be caught into that emotion. Next, Euphoria. Guys, is that clear? Is that, do you understand this? Does it make sense to you? You can let me know also if you experience something similar in your trading. I'm really very interested to know. Okay. Unless the sound stops and nobody types anything and nobody listens to anything. All right. So the next one, Euphoria. Euphoria is when we experience the sense of invisibility, and that becomes addicted to the thrill of trading. So in that stage, we tend to risk more than we used to risk. And we firmly believe that this winning stake, this rising impulse move in the price, whatever, it will never end. It's going to keep on forever. So if we are convinced by our thought that the market is going to keep rallying, let's say we bought, and the market is going to keep rallying, and we think that it's going to go forever, or until we think it's time for the market to reverse, or until we believe enough is enough, then and only then we would like to be out of any position or out of any investment. Therefore, if we think that it's going to go one way, and if we are convinced mentally by our experience of the multiple winning strikes, that this is going to just keep going in our favor, then why not increase the risk and maximize the return? Isn't that true? Isn't that a healthy way of thinking? Isn't it, guys? So why not, instead of 1% of my capital, this time to risk 3%, 5%, 50%. I used to coach traders that they did that from the 1.5% to 50%, from $20 a trade to $1,000 a trade. That was Australian dollars, but it's still 1,000. Okay, so we have to understand when we are about to get into this euphoria state, and we have to know what mechanism to use. First is we must acknowledge that, hey, I'm about to get into that stage because I had multiple winning strikes, and I believe that I know the next move of the market. So that's the first red flag. The second is by thinking to increase your risk because of some multiple winning trades in a row. When we better, and that's not a trading advice, that's how I believe it can be done, and that's how I do it anyway. I'm sharing with you what I'm doing in my trading. The only case that I start increasing my trading size, my risk, is only when after some months I experience more and more percentage, I experience more winning overall percentage, not trade by trade. All right. So I hope you understand when we get into the euphoria state. Next, after we went from the greed because we think that we know what it's going to happen, and we add on to positions, we make some good trades, then we believe that, okay, this is an endless and it's going to just keep going in my favor and only. Then what happens? What's the next thing? The next thing is the market, it start going, what we express out loud is that the market is going against us. We kind of taking personally. The market is not going against us. We made some calls, we played some trades, and the trades lost, but this has nothing to do with ourselves and the market. All right, it's nothing personal. This is our business. Like any other business, I told you multiple times, any other business, it has costs, it has expenses. The only cost and expenses a trader has is the electricity by plugging the laptop or the computer, the internet, by using the internet, and when the trades, they lose. Okay, this part of the business. So with the fear, losses begin to accumulate. Why? Because we behave and trade through emotions and not through a plan. We become uncomfortable, and that's what I just said, we make decisions based on our emotions. And with an unclear state of mind, we tend to decide not based on a solid plan, on a preparation base, but we just act based on emotions. And what are the emotions? How do the emotions generate? in actual trading by looking at the charts is when the green candle goes up, we feel we have to buy, and when the red candle appears and push price down, we think that we have to sell. So where is our plan? Our plan is lost somewhere at this point, okay? And we start just behaving under fear, and unfortunately, we experience more and more and more losses. Then is the desperation state of this emotional cycle. And what we're trying to do here, we're trying to feel that we want to rescue ourselves. We feel that we want to recover some of the losses. We see the account that it started with, let's say, $10,000. Now it's on $2,000, and we think how it ended up there. What did I do? I have to make it back. And in the effort to make it back, of course, again, we start risking as much as possible, because we want to make it not only back, but we want to make it fast. So there is no plan again. There is no clear thinking. If we talk about the risk management, it's not even there. It doesn't exist. Risk management, it's not at any point the part of our trading. Now, everything started from the emotion of the winning trade, and it leads to desperation, just to go to the last one, that it's the panic mode. This is usually the last state of the emotional cycle. This is the moment traders and investors, they feel that they are absolutely helpless within themselves. And again, now I'm describing the realistic state of mind, the emotions, if you went through, or if you just started, and I'm trying to help you not to go through that whole emotion, because from now on, you're going to know it, and you will know the characteristic of each phase. When everything is red on the board, and in our trading activity, we see everything, it's going to losses and to minus, and we start thinking, we start digesting that, okay, now I'm losing here, the account is losing, and I have enough. And a few moments later, they start closing all trades, and they just sit there and trying to think what went wrong. All right, but that's the final state. What went wrong is it starts from the grid. Okay, it just appeared here. That's all. Now, guys, do you understand this? Do you have any questions to ask me? Please let me know if you want to ask anything. Yes, all good. Fine, thank you. Thank you, perfect. Okay. All righty. Now, before we go to the charts, I would like to make sure that you guys know about the live trading. We do every single day, Monday to Friday, from 7:30 a.m. GMT until 9 o'clock GMT for 30 minutes prior to the London Open. And also we do live trading at the London Open. Usually I do on the DAX. And of course, the weekly fundamental analysis I provide through the podcast. It's on our website, and you can easily access it. At this point, I would like to bring the chart, as I don't see any questions. Any other questions? So let me bring the charts. Cool. Now, this is a pair I choose. That's the Euro JPY. This is a trend we had in summer, in European summer last year. It started from May 2022, and it went on for some time. Now, what's the significant and the interesting with traders' emotions here? So, at the beginning, the market, let's use annotation here. So, at the beginning, the market clearly start making higher highs. So we had this down trend line, it broke to the upside. We observe solid green candles at this point, and trend following traders and everyone, let's say, uses moving averages, whatever you guys use, and you start seeing that the market is moving upward. At this point here, many traders, they feel, pay attention to the words I'm using, they feel that the move is over. This move here is over. This uptrend is over. Why do they feel this? Because they don't know the outcome of the next move. And how can I be sure about something if I don't know what is going to happen? And that's the reason traders, they really have a difficult time to understand that in trading, we always trade the unknown. That's why we have edge, but we trade the unknown based on very strong patterns. They work the last 100 and 150 years, back-tested work, like trends, like ranges. But let's focus on the trend. So traders, allow me to use the word novice traders. Traders, they operate purely based on emotions and they don't want to use a trading plan. They see these candles here, and this one here, it's a hanging man in candlestick pattern. Then we move on, we see hanging man, it's a reversal pattern. Then we see the doji candle here, that's indecision. But then the next one, this one here is a very interesting candle. The next, not this one here, but look at this one, guys. This one here, it's what we call long leg doji candle, also indecision. Traders then, they start looking at the RSI and stochastic. RSI indicator, it's above 70. I covered it, but it's above 70, and it means it's in an overbought condition. And everywhere on internet, unfortunately, not everywhere, in most places on internet, unfortunately, they mention that an overbought condition of an RSI, it means it's time to sell. But that's not true. An overbought condition in an RSI, on the RSI indicator, and in any boundary indicator, it simply means we are in a strong trend. And therefore, we look to buy, not sell. All right. And okay, Theo, how do we know that you are saying the right thing and not on the other 100 websites we read, and on YouTube, in many websites, not everywhere, but in many websites, they don't say the truth. It's not about who say the truth. It's what it's written on the whales book and in technical analysis when the author explains how to implement and how this indicator works. And I made the effort and I went through all the indicators, and that's what I present to you. Okay. So in an overbought condition, we don't sell. We're going to try to sell under other circumstances in an overbought condition. But let's focus on this part. Traders here, they feel that we missed out of this opportunity. They start thinking what they missed out. But how can you miss out in a trend that, as you are not the market maker, and at this point they start looking at this one here and they think, if I was looking, that was very clear that the market is going to break to the upside. Damn it, I didn't get involved. No, it's not correct, because you don't have any statistical edge to participate in this moment. So don't beat yourself up. Don't think that you should be trading here. It's an area that only the how do we call them? The informed investors, the people who are moving the markets, they create this base and this explosion to the upside. So how should we know that? We didn't know. What we know is that this trend has been developed, and from now on, we have to look for buys. But because now it's very obvious, traders, they see the first candle, the first red candle here. Sorry, but I cannot hide it so you don't see the next one. They see the first candle here. Wow, bearish engulfing, reversal, RSI overbought, all in, I will sell. I used to trade with 1%, but because I missed the opportunity, now I want to put 5% because I'm sure what it's going to happen. So do you guys see the pattern from what I described to you? We go from fear, we go from the different stages. So the market made this move here, and there are two types of traders. The traders, they are still in a logical sense of thinking, like, okay, I see that the market made a new low. I see that it's a red candle, and I understand that this is an uptrend. So I'm scared, and I will get out of the position because this market, it's in an uptrend. All right. And they save their position, but the harm, the emotional harm they're going to do to themselves, it's going to be even worse, because I will continue the example. The other traders, though, they sell here, and then they see this bullish candle at this stage, and they think, okay, I'm wrong. Now I'm going to close the position. I enter here, I got out there. At least I didn't got hit full on my stop loss. Both of traders, both of them, they don't feel any negative emotions yet to lead them to the panic state. Why? Because they think that they rescue their trade. Let's move on. They don't buy though here because they were focused on this move here. So they don't believe that this trend is not over and the market is going to keep rallying. They think that this trend is over. Then they see a new high here, higher high, and immediately they see this candle here. That's an inside candle. That's another hanging man after an uptrend. And what do? They say, okay, this time I'm going to sell from here. So I'm going to make more money. I'm going to recover the loss from here. They sell and they are in a winning trade. And then the market put this hammer that it's in align with the uptrend. This is an uptrend, traders, higher highs. It's in align with the uptrend. We buy here, but they don't. They think, okay, the market, it has more to sell off. Maybe they draw Fibonacci retracement and from the low to the high, and they see, 50% didn't even reach, 61% hasn't even reached. We don't use Fib toward because we know 100% the price is going to stop there and even bounce. We use it to find potential areas of retracement. Instead of buying here, the traders, they sold there. Most likely, after they see this topping pattern here, they are waiting for the market to make another move to the downside. All they do at this point, they are trading based on emotions because they cannot be patient and observe the trend, and they don't believe in trends. That's why they don't tend to trade with the trend and they try to trade ranges and other stuff. Then the market made this bearish engulfing. What do? They are rushing to sell again. They are making a little bit of money. And now both of traders here, they see a double top. And they say, oh, double top, reversal. Reversal. We have bearish divergence on the RSI. Perfect. Let's sell. As I have this confirmation, double top, bearish divergence, market is not trending upwards. Why not to put 10% of the capital this time? Why to put only 1%? Why not to put 10, 20, 30%? What does the market do? The market is going higher. Why do you stop loss here? I know that I make money here, I make money there, I was making money here. Why to put any stop loss? I know what is going to happen. The market comes here and they believe, okay, I'm rescued. It's going to move downwards. They still have hope. Here, they start get panic. Their account is way much into losses at this point, and they don't even think logically. They feel that, okay, I'm about to lose everything. They close the trade based on the panic mode. They are into an uncontrollable state of mind, and after they get out of all the trades, they just look back and The only thing they say to themselves, my God, why I didn't see that trend? Why I couldn't see that trend? Why I was just going all the time against the trend? And this is something that many traders, guys, they go through. Okay, I describe you pretty much that emotional cycle in reality, how many people they interact with the markets. Now, how do we solve? For conclusion, how do we solve this? First, we need to make a plan. Trading plan. It's much more important to follow a trading plan, because the trading plan will keep us out of any trades that they weren't planned. The second thing is, even if we get into this state of mind, even if we go through this, at the beginning, the greed, the euphoria, we have now the knowledge to understand it, to acknowledge it, and to stop ourselves from keep doing that. We can just close our computer for few hours, few days, however it works for every individual, and we can come back with a clear mind. We can look for a mentor. You can come to us here at Admirals. You can send me an email, and we'll be very happy to help you. I mean, to go through, you can send me messages on live trading. We do the live trading every morning. I'm sure you do have the links. So, guys, I hope you gain a lot of value from this webinar. And I would like to believe that from now on, you're going to start implementing more logic into your trading. For me, from Admirals, we would really like to wish you to have a lovely afternoon, a lovely evening, morning, wherever you are in the world, in any country you based. I look forward to see you on the webinar tomorrow. And in the meantime, have a great afternoon. Thank you so much, and bye to everyone.